Good morning, everyone. I'm Vince Lancy. It's 7:57 Monday morning. This is the Goldfix Market Rundown. We have three things to discuss today. The first is U.S. secures 7.4 billion smelter for silver and other critical minerals. The U.S. has quietly locked down a 7.4 billion smelter deal, giving Washington and the Pentagon direct control over silver and critical minerals processing as supply chains harden against China. The second is an analytical piece. Silver isn't running hot because of traders or hype. It's because it's becoming a geopolitical pressure valve tied to Latin America, China, and the growing Taiwan flashpoint. Finally, in the premium section at bottom of this post, we will lay out a Goldman trade desk idea for gold in 2026, one of their top 10 trade ideas. It's not something that most people can do. And it is something that's complex, but it's worth understanding to get an idea on what people are betting, what the casinos are offering to bet, and how the mindset of the market is evolving going forward. We have that at the bottom, and we'll go through it later on today in the PM Gold Fix. There's the home page. Here are the markets. 10-year yields are down 3. The dollar is up 19. The S&P 500 is up 23. The NASDAQ is up 113. The VIX is up 61. Gold, 44.14, up 83 off its highs. Silver, 74.97, up $2.17 off its highs. Copper up 16 cents, almost 3%. WTI up 42, despite all the bearish news out of Venezuela oil. Natural gas down 19. Markets are really whippy today. I mean, in all kinds of directions. Okay, just a quick analysis. Simply put, if you're looking at gold, what did the arrest of Maduro do? It increased uncertainty in the world. It added a layer of uncertainty. So, will China de-dollarize faster, or will they capitulate? Will Chinese trade partners say, well, you didn't have our back, why should we stay with you? So it creates uncertainty, and uncertainty means you buy gold. It doesn't matter where you are, you buy gold. Silver is a little bit different story, but it's completely related. I believe that the silver rally has another leg under it now because of the smelter deal, which we're going to cover in a little bit. That's in the top left-hand side. What that means, just to give it in a sentence, the U.S. is reshoring, onshoring, and friendshoring supply chains. That means China will not have the access, the rest of the world will not have the access to Latin American natural resources. That means that we are on a path to eventually putting metals in a 232 tariff situation. I'm not saying that's happening tomorrow, but what it ultimately means is the U.S. controls global pricing. Yes, it's weakened, but the U.S. controls global pricing. If we say we want something and we're going to pay higher for it, well, you've got to pay higher than us if you want it. And we own the printing press. So we can't print silver, but we can print the money that buys silver. And that's going to keep driving prices up. That's the geopolitical metric going on right now. That's what I think anyway. And it goes for all metals. The smelter is an example of that. Our ask, buy a hat, please, and support independent media. MAUGA, make gold great again, and make silver great again with a Goldfix logo attached. So the first story, the United States has secured a $75 billion non-ferrous metal smelter in Clarksville, Tennessee. Department of Defense holding a 40% stake. Department of War, depending on how you look at it. Led by Korea Zinc, the project will process silver and 12 other critical minerals, marking the first new U.S. zinc smelter in over 50 years. Officials frame it as a strategic move to regain control over refining capacity, secure Latin American supply chains, and reduce reliance on China. It's a big deal. It's a big deal, considering that 2 years ago, we didn't want to do anything. These are polluters. It's a big deal to use national security to say climate change, not that interested right now. Interested in being around in the next 50 years. There's all kinds of knock-on implications for that. The Swiss are probably watching this saying, oh shit, we better get our act together. That's that story. The other story, which is more of a breakdown in analytics that we put out before we did this story, is silver's recent price behavior is signaling geopolitical stress, not speculation. Okay. We've shown charts to that effect. There are no longs in this market at the fund level, no significant longs. As US-China rivalry intensifies, contested Latin America supply chains, diplomatic alignment at the United Nations, and Taiwan's status are converging into a single strategic fault line. China's hardened policy towards Latin America and its push for political alignment mirrors a proven playbook used elsewhere to secure institutional support, like in Africa. Silver sits at the center of this shift as both a critical industrial output and a strategic mineral, with markets registering supply chain control risks before governments formally acknowledge them. If you think that I'm making too much of this about silver, I'm not. It's geopolitics, and silver is the point of a spear. It's not the most important. It's not the most crucial, but it is the highest beta commodity, and it reacts to things because it is a discontinuously liquid market. It's big, but it's chunky. It doesn't happen all at once. Contracts are horrible. And so if you're trading metals and you understand metals, you're trading geopolitics. Oil traders should be all over this shit instead of putting it down. It's part of their business. Where was I? Yeah, so there you go. That's that story. Moving on. News analysis, geopolitics, China after Venezuela, a fresh checklist. After the U.S. stepped into Venezuela, we put together a old style Stratfor type of piece. And it was a map of unknowns and knowns. And we tried to quantify the potential risks and changes. And one of the things we said was, actually the main point that we said was, all the other stuff aside, was this. The U.S. going into Venezuela in what's called a proximity protection gives license to China to do the same thing with Taiwan. Now, if you've been reading or watching what we've been saying here, these things are extremely linked. The U.S. put out its national security strategy, and then within a week, China put out its Latin American strategy, which heavily mentioned Taiwan. And then we went into Venezuela and just arrested Maduro. So bang, bang, bang. We're talking about serious cause and effect here. And this being done, cynically speaking, it seems to me that the U.S. has no real legal ground or recourse to stop China if they were to go into Taiwan. Now, I'm not implying they will. There's all kinds of calculus and risks to that. If China does that, Japan just might freak out, right? I mean, in an aggressive way. China does that, and the U.S. can defend on the grounds of humanitarian. Because Taiwan's a different economic culture completely than China. So, China says Taiwan's part of China, and the U.S. says, well, economically, we're not so sure about that we want them to be part of you, at least not until we get our semiconductor supply chain completely solidified. So the point is, what the U.S. did in Latin America, a neighboring country that it didn't like the leader, and it had a reason, narco-terrorism, but, it's a reason they've had for years. They just decided to do it now because it is convenient. That gives latitude to China. And Why am I making a big deal out of this? Because on Sunday, Bloomberg put out a big story on how it does that. So we're happy to have been joined by uh, such pedigree as Bloomberg. Anyway, moving on. Data on deck this week is jobs and unemployment data. You can see the rest of them there. The Goldman Trade Desk says there's more upside. Whoops, don't want you to see that. More upside in gold in 2026. We will break this trade idea down on its merits in the Gold Fix PM analysis. Let's go to the charts for a second. All right, I want to start with silver because I put something in the chat last night or early this morning. That's a 4-hour chart, and using poly as a guide, it'll pop up in a second, I think. Essentially above 74.60, 74.50, call it. Once we broke through that, I said if we hold above 74.50, then we should go to 77.50. Now, looking at this chart in isolation, this is the pullback that you would buy if you were bullish. And if we go below 74.50, you would get out and assume that we go to potentially down to 71 and change if we break below there for any meaningful time frame. That's what I said last night. You want to be long above 74.50, especially if you get a good entry, assuming that you can get as high as 77.50. 77 is happy. I'd be happy enough with that. Then I looked at gold this morning. Again, staying with the poly metrics. And gold says we're done on the upside. Okay, so if gold breaks 43.96 and silver is below that 74.50 area, well, you might want to say we're done for the day. You might want to say we're done for the day. I don't know. I don't feel strongly about it, but I'm just trying to give you some mindset to think about this. Obviously, we're in bull markets, but look at the gold chart there. What's the 2% rule? Well, gold was up 2%. Now, gold's up 2.3%. Now it's up 1.7%. There's a war. China's buying and we're tamping. Or China's buying and maybe China's selling during our hours. Who the hell knows? But just, the only good advice, only really, really solid advice I can give you is the advice that I used to give traders that work for me in energy. If you're trading natural gas, and you're trading different months, they're not the same commodity. So you've got summer and winter. So I would say this to you using that concept that each expiration is a different commodity. Don't look at them as related to each other. There's no correlation right now because of weather. Well, I want you to look at that rule and apply it to gold. Gold in the US is not gold in China. Gold in China is not gold in Europe. These are 3 different commodities. So either you're day trading in your time zone or you have a much longer time frame, which I think many of our subscribers do. The Goldman Trade idea is at bottom in the premium section, and we would ask you again to support independent media and please buy a hat, MAUGA, MAGGA, make gold and make silver great again. Have a great day. I'm Vince.